Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Tuesday, April the 10th, 2012. Well, a very large black body candle today. A candle with a lower high and a lower low, continuing the trend to the downside in the first time frame. The sellers have closed with very strong control of this market, and they've shown very strong commitment throughout the trading day to close the market down pretty much at the low. An extreme day, a very large extension to the size of the body of the candle, and quite often after we have these extreme type days, the market needs to take a rest, and this market will now be interacting with a very important level of support. The 1356 level is where the market traded to, and that was previous resistance and then support, and now it's acted as support for today's trading. But just below there we have the top of the cloud, and I expect that the market may test down into that area, and then we'll see some buying coming in. When we see such large extreme days, markets fail to go on with the move for a long period of time unless we have extreme and super extreme amounts of bearishness. I imagine that we'll probably get a candle that tests down into these areas with a large shadow, and then perhaps the buyers will attempt to take control. So this area of the top of the cloud should hold as very strong support. We also have the 1347 level close by, and then down below there another minor level at 1333 where we see this minor swing high. Down below there we have the round number 1300, and that will be a very important level for this market. And just below there 1295, there was another recent important level. In terms of Ichimoku, the market is remaining bullish in the long-term time frame by trading above the cloud, but only just. This market is so close to the cloud now that it's almost neutral. And look at the change of sentiment in this market, where we had the breakout above the cloud in December. 3 months later now, or 4 months later now, we now have a market retracing very close back to the cloud and almost trading within, so quite a change of sentiment in this market recently. We also have the first time in quite a while since December that the market's closed down below the Kijun-sen, and that's quite significant. We previously had the market finding support here at the Kijun-sen. Prior to that, the market was finding support at the Tenkan-sen in the fast term time frame. Then we broke out down below the Tenkan-sen, found support at the Kijun-sen, began trending up again in the second time frame, making higher peaks and higher troughs, and was finding support again at the Tenkan-sen, then broke out down below there in a bearish way, and now a breakout down below the Kijun-sen. So quite a change of sentiment in this market, but we should see the market hold up here at the cloud. In terms of the Kijun-sen, the market is now trading below, so obviously we're bearish in the medium-term time frame, and it's been quite some time since we've had that scenario. But now also bearish in the fast-term time frame by trading below the Tenkan-sen, and this is the fourth trading period now where we've had the market close below the Tenkan-sen. And if we look back at this history here, it's been quite some time since we've seen more than 2 closes below the Tenkan-sen, so a large change of sentiment. In terms of the Chikou span, that is now below the corresponding price action, and that's confirming the bearishness that we're seeing in the medium-term time frame and the fast-term time frame. We're still technically bullish in the big picture terms, but very high possibility that the market will trade to within the cloud. So moving forward, for tomorrow, 1356 is very important. The top of the cloud is important at 1352, and this level at 1347 will be important for this market. But I expect to see this market take a bit of a break after these 2 or 3 out of 4 very extreme down days. Next, moving to gold, and here we have a bullish candle with a market that's trending up. Prior to that, we had the market rally on an indecisive type candle. We had a gap in the trading here for the previous day's trading, and that set up what we call a window in Ichimoku and candlestick terms, and that window was tested immediately for today's trading, and the window was closed. But the important thing is that the area held as an area of support for this market, so a very important area moving forward. A very large white body candle, so the buyers have gained some momentum, whereas we had these previous two large black body candles testing down to 1625, and today we've seen the buyers go on with the move that began a few trading days ago. The buyers have closed in control, they've made solid net bullish progress, and they've been quite keen to take this market higher. And we've also had the market close within the cloud, so in big picture terms we have a market that's neutral in big picture terms, whereas we were previously bearish by breaking out down below the cloud. The market is, however, still bearish in the medium term and fast term timeframes by trading below the Kijun-sen and Tenkan-sen, and looking here at the Chikou span that's below the corresponding price action, so it's confirming the bearishness that we're seeing in the faster timeframes. The Chikou span, the Kijun-sen here, the pink line, has held as resistance for this market today, and that could be significant moving forward. The buyers will need to be strong enough to close the market up above that level, and it also coincides with the previous level of 1667. Here we see that it acted previously as support, and here previously as resistance, and now roughly today this area is acting as resistance for the market. So a very important level if the market is going to trade higher. Some minor levels up here at 1685, and then up almost at the round number 1700. Minor areas of resistance here. 1700 will be a major area of resistance. To the downside, we will have strong support at 1643, and then down to 1625, and that area now extends down to 1612. So solid support down below. But just looking at the series of lower peaks and lower troughs, this market is still making a series of lower peaks and lower troughs at the moment, and we are in a downtrend in the second time frame. So we should look to, if we do see any bearishness in this market, we could see the market trade lower and continue that series of lower peaks and lower troughs and find resistance here within the cloud, and the sellers come back in this market and gain some downside momentum. This current candle is developing as a black candle. It's too early to say, we haven't been trading for very long, but the market is already testing the bottom of the cloud, so that is a crucial area there, roughly 1658, 1659, and a bearish breakout could see the market trading fairly quickly down to 1643. So moving forward tomorrow, the 1659 level is important, but also the area at the Kijun-sen at 1665 and this 1667 level are important if the market's going to continue trending up in the first time frame. Moving to light sweet crude oil, and here we see continuation of the trend to the downside. Previous day's trading, we had a candle that made a lower high and a lower low, and a candle that just broke out from the bottom of the cloud, a very thin part of the cloud around this area. So some downside momentum for the previous day's trading, a test down to support at 101, but upside price rejection. We saw the sellers lose commitment down around that area for the previous 3-4 trading days. Today, however, we've seen the sellers go on with the move and show some strong commitment. We have a large black body candle once again, and we can see these previous black body candles every couple of days, and they make serious downside moves when the sellers take control of this market. Today the sellers are in control once again, and it wouldn't surprise to see the market test down to 100 for tomorrow's trading. The 101 level is a very important level of support, however, for this market. Previously we can see here the strong rejection from that area, and then to the downside, and then to the upside over the previous 4 of 5 days. A day where the sellers are keen as well, showing strong commitment and in control, and the large shadow on the small shadow on the top highlights the resistance offered at the top of the cloud now, and that's at 103, and we can see that the buyers lost commitment up around that area. Now this market is bearish in all 3 time frames now. We've had the bearish breakout down below the cloud, so bearish in the long term time frame and bearish in the medium term and fast term time frames by trading below the Kijun-sen and Tenkan-sen. and the checkout span here is below the corresponding price action, and confirming the bearishness that we're seeing in all three timeframes. So it wouldn't surprise to see the market test 100. Now I doubt that we'll see the market trading quickly below 100. We could see the market probing down below there and see buying come back in over the next few days, but that will be a very important level moving forward, and I doubt that we'll see the market trading solidly bearishly below there very soon. To the upside, we do have very strong resistance, as I've said, at the 103 level, and then extending up all the way through to the top of the cloud up to 105.31. So a market that's bearish in all three timeframes, but solid support down below and also solid resistance up above.